So with home prices plummeting and with 10-year note yields rising, mortgage rates sure to go up, already are, is now the time to buy a home. Joining us, real estate attorneys Shari Olefson, Adam Lakeman-Bailey. So Shari, whatever happened to buying low?
Well, you know, prices are low. The issue I think that most people are concerned with, Larry, now, of course, is that prices will go down further. And the problem is we still are not back to thinking of real estate as a long-term investment, which is where we need to get. Because if we look at real estate, not just in terms of the next year, but in terms of the next 3 or 4 years, as we always have, it's a fine investment. Even with a 5 or 10% reduction in the value over the next year or so, at the end of a few years it will recover. And it's always been like that. We've always said you need to hold for at least 3 years in order to recover at least those closing costs and break even. So if buyers stick with the traditional valuation methods of replacement cost or 3 times income or 15 times rent, I think they'll be just fine.
But Adam, isn't it tough for buyers right now that do want to buy, that want to get into the home market? I mean, when you look at the lending among the banks, there's a requirement for much higher down payments. And if banks anticipate that home prices are going to continue to fall, aren't they going to be even more reluctant to lend?
Yes, we now are only lending, banks are only lending to people that actually could afford a mortgage, which means there's less people on the market to buy. So if you take 3 things, you take all the foreclosures that haven't finished, that are going to flood the market, and you're going to take all the people that can't afford to buy. You take all the people that are fearful of buying. What you have is you have more inventory in the market and less buyers, which guarantees lower prices.
But Shari, I mean, if you're trying to enter this market, does it now make more sense than any time in the near future or the recent past? I mean, if you're trying to time a bottom in prices and a bottom in mortgage rates, even if prices go down a little bit more, mortgage rates are probably on their way up. Now's as good a time as any.
Yeah, I agree. And Adam raised an interesting point, which is if credit tightens, even if prices go down a little bit, just that tightening of credit might make it virtually impossible for a lot of people to buy at any price. So if they want to get in, now may actually be the time.
Shari? Isn't that going to hurt prices?
It could, but we need to look at this in terms of the long term. In the long term, even here in Florida, where we saw the biggest hits than any place around the country, our prices are still double what they were 10 years ago, even with the bubble. So we need to look at it in the long term. The other thing is, real estate is not, it's a hybrid of an investment. It's part consumption and it's part investment. So it's not just about ROI, and we need to look at what else other people are going to be doing with that money that they'd be spending on buying a home. If they're going to be spending it on rent, I mean, clearly, if you bought a $200,000 home, even if it goes down 5%, you're way better off than renting at, say, $2,000 a month for the next 3 years.
And
so you
Adam,
really need to compare apples with apples.
I don't know about that.
But Adam, don't you want to buy, if you have the credit to get a loan? I understand there's a credit problem, but there's some reports that the banks are loosening up on credit right now. And if you could, wouldn't you want to buy before mortgage rates go up? I mean, the economy is heating up.
Just buy a house you can afford.
That's right, and put the right down payment on. But I think the rising mortgage rate may incentivize people to come in and buy.
I agree. I think there's no better investment in the United States of America than buying a home for the long term. If you're doing it for 20 or 30 years or even 15, and you believe in the American economy, it's the best investment. Because interest rates aren't getting any higher. And therefore, if you believe that it will appreciate, you're locking in interest rates so low, it's terrific.
Shari, what do you tell your clients the long term means? I mean, you guys are both saying that if you're going to be an investor, you have to be in for the long term. There's no more flipping. What is the long term?
I would say a minimum of 3 years. That's what we've always said in real estate. That's what we're saying now. And
that sounds really short. Adam,
wow.
I thought you was going to say 10.
It's impossible.
I'd make a bet if it was just 3 years.
It's impossible.
I think it's more like 20.
The average foreclosure takes 23 months. Assuming, and that's before...
It really depends on the market. We actually have prices going up in about 24% of the markets that we measure. It really depends on the individual circumstances as well. I mean, look, when I was graduated from...
Here's the reason.
When I was graduating from college, I would have lost several grand just to get out of my parents' home. So it really depends on your circumstances too. Clearly, a lot of investors are buying, and there's an opportunity for buying rental properties as well. But it really depends on the circumstances you'll be in if you don't buy, and now and in 3 years.
Adam, go ahead. Last word.
All the statistics that show that prices have increased are comparing it to 1 year ago. We're still not done with our hangover. We're in a real state of economic crisis as far as the financial industry is concerned. Until the foreclosures are let out, until we have the full inventory, until the free market takes over and allows people to buy homes for what they're worth, and people start believing in the economy, you got at least 4 or 5 years before we're going to be back to normal.
Oh my goodness. Okay, well that depresses me. Thank you so much, Shari and Adam.